Jamie, Steve, what was going on today in the markets?
Hey, everybody. Welcome to Office Hours. What's going on over there, Steve?
Just another Monday.
A Monday indeed it is, and kind of a strange little Monday, green, but some characteristics about the day that I'm sure we'll get into the details here in just a momento. So, hi, everybody. Welcome. Wow, it's already March 30th. April is coming right up. Wednesday, April Fool's Day. So March will be in the books. So welcome, everybody. Before we get rolling here, just want to take a moment to make the lawyers sleep easy. Just want to make sure everybody purposes only, meaning if you need investment advice, please seek out someone that is licensed to be able to give you that information, like a registered investment advisor, Series 7 licensed stockbroker, one of those people that's legally allowed to dispense investment for the hour for the new. One of the anchors of our trading community is the Traders Room that you can see right up here in the upper left-hand corner, hosted by Mr. Barry Anderson. A great place to learn if you're new, and a great place to hang out if you're a seasoned pro or anywhere in between. Typically anywhere between, just ballparking it here, could be 300, could be 500 people in the room, depending on the day. And Barry does a fantastic job, not only at moderating the room, but showcasing his trading style and the way that he uses the TI technology as well. And one of the, of course, Barry, and then the quality is, it's up. You don't even necessarily have to be a subscriber to get in there and check it out. So if you have not been taking advantage of that resource, by all means, probably in your best interest to do so. Of course, on Mondays at the 5 p.m. Eastern slot, you get myself and Steve. Steve takes the steering wheel for the trade of the week on Tuesdays, and Andy Lindloff is going to ride shotgun with him. Change it up just a little bit on Hump Day, Wednesdays. You got our CEO and founder, Mr. Dan Merkin, along with our Chief Technical Officer, Brad Williams, in there, typically showing you new things that are coming down the developmental pipeline. So always a good time with those guys. Andy's going to round out the 5 p.m. Eastern webinars on Thursday with the Trading Studio, and I will be his sidekick on Thursdays. And then, of course, the ever popular daily support session, which is kicking off every weekday, Monday through Friday, 12 p.m. to 1 p.m. Eastern. As you can see here, we've shifted the venue to YouTube. All right, nice and easy. All you have to do is bookmark this URL down here. Well, I pulled up my little thing there. Get rid of that. trade-ideas.com/live. Once you get there, you can just bookmark that URL, and that's the place you'll go each and every day for the 12 p.m. to 1 p.m. I'm looking at this slide here. It says 12 p.m. Eastern. Okay, 9 a.m. Pacific Standard Time. Yep, I used to be in Pacific Standard Time. Now I'm in Central Time. But yes, it does start every day at 12 p.m. Eastern and goes until 1. So basically anything TI related.
Goes backwards in time.
It does, it does. So make use of this resource. We've got great crowds in there every day. And as I said earlier, nothing is off the table. So it could be something as simple as a configuration issue, or maybe some back testing or anything in between. So come join us for the daily support sessions. New accounts since we introduced the AI. Wow, Steve, it's already been 4 years, okay? Where this is the 4th year, I should say. 16 to 2020, and here we are in 2020. It seems like just yesterday when we released the first Holly AI module back at the very beginning of 2016, but it's been crucial to our growth moving forward over the past 4 years. Not attendance, but new accounts have been on the rise ever since, and Holly didn't do too bad today, and we'll take a look at that shortly. But nice growth on user accounts. Expect to see more of the same. And along with that, not only do we have the AI coming on board back in 2016, not too long ago, we released Brokerage Plus, which allows you to use our interface to trade, currently only with Interactive Brokers. But the good news is we've got an E-Trade version coming up, hopefully sooner than later, as soon as we start testing that thing, which A lot of us here are frantically opening up E-Trade accounts and getting everything set up, but as you can imagine, if you have some little thing that needs to be changed, called E-Trade on Friday, they're like, yeah, we will get back to you in 3 to 5 business days. So I guess they're a little understaffed right now with the current ongoings of the great virus thing that's floating around still. But hopefully before too long, maybe everybody will be back to normal business hours. However, having said that, the figures and the bars that you're seeing here on this screen here show you live orders in blue and demo orders are in orange, or what we could call paper trades. So these are all orders that are currently being executed through our Brokers Plus module connecting to Interactive Brokers. And as you can see, just a slow little steady increase quarter to quarter. And we expect that to continue. I think last time I looked at the back office, we're on pace to have a record month for live executions. That lets us know that people are digging the technology, they're using it because, well, we just think it's a little bit more intuitive than the Trader Workstation that's currently offered with Interactive Brokers. So good news on that front, and good news on the $0 commission connection with E-Trade, and hopefully testing will begin soon on that one. All right, getting on to the agenda today. Of course, in keeping with tradition, the market recap. So Steve, I'm gonna go ahead and kick it over to you and let you talk about the overall action.
Yes, Chris, I see your comment about Portnoy. I didn't really know much about this guy. Barstool Sports, I think, was the guy. I think I've seen him a few times, but all of a sudden he's discovered day trading, real money. Sorry, gambler apparently, who's just getting his fix live, and he's having some beginner's luck here and there, but he's probably due to be just absolutely slaughtered at some point because he really doesn't know what he's doing. But it is fun nonetheless to watch him, and Sean has been reaching out to him, troll him a little bit. All right, so the rejection of this is severe, but that's where the rubber is going to meet the road, and we're going to see what we want to see is a closing candle to at least kick things off, a closing candle, and then I said we want to start to see a flattening of that 10-period moving average, and then we want to start to see a period of a few days moving sideways along that flattening moving average. So we're actually getting everything that I had kind of hoped for and said that we need to see. But that's really just the first and second inning, because as you can see, now we're running into the second backstop of the 20-period moving average. We also have a pretty nasty, I think some people would call that the death cross, the 50-period crossing below the 200-period up here. So there's a lot of noise and stuff going on up there. Exactly, Chris, a lot of stuff going on up there as well. But the constructive nature of this action is good. It's exactly what I was kind of hoping we would see. And we're seeing it in a lot of names. We're starting to see it now, possibly, you know, in the actual indexes themselves. So from here, you know, what I would like to see, obviously, is a continued flattening and even maybe even a curving up and a test, a pullback and a test where the buyers jump in and say, nope, it's time to bring this bottom up a little bit more. And then we maybe break through the 20 period. And the same thing applies. We got to have a closing candle above the 20 period. But then I think it's going to start to get a bit more dicey. This is what I was teasing Jamie with. I think as this 50 period starts to come over, this might be our next issue of major contention. I'm trying not to get too many chess moves down the board, but what I mean to say is I think we're going to resolve to the good side here over the next few days. But this down here, if it is a bottom, I hope it's a bottom, it's probably not going to be an event. These types of things generally are going to be more of a process, and I've heard a lot of smart people say the same thing too. Whenever we have these nasty events, it's not like we just turn on a dime and say, whoa, that was crazy. Remember that? No, it's not really the way it works out. It starts to come back and be a self-fulfilling prophecy of a possible retest. And so what I'm saying is, don't be surprised in the coming weeks or a couple months if we slowly start to roll back over. And it's really needed for a market to retest the prior low and see what's going to happen when we get there. So all of this is just, you know, oversold bounce circumstance. We're just going through the motions here. I think the bigger picture lies in a retest at some point. But for now, we'll take what we got. We got the flattening moving averages. We may have some nice plays, you know, to the upside here. But looming in a lot of different names, and definitely in these ETFs, is going to be this declining 50-period moving average, which just crossed the 200. So the death cross is back in play. So anything goes up in here. We'll see what happens and how that resolves. How does that look in NASDAQ? Because this was look at the NASDAQ. I didn't really catch that today. I haven't looked much until kind of like to look together sometimes, but the close showed that the NASDAQ, the Qs, were able to give us a closing candle above the declining 10 period. This isn't even moving sideways. This is moving nice and steady higher. So a lot of good strength in what we're seeing here. But in the NASDAQ's case, this is still going to become an issue, I think, coming up here. So same thing could happen. It could get caught up in the 200-day moving average here, and the 50 could come to meet it, and then respectively we go back over and roll over and test those lows. I'm not predicting it. I'm just saying this is just, in 25 years of watching price action, bottoms are not an event, they're a process. And a process often means it's going to get a little ugly and nasty, and people are going to have to hold on to their socks more than once and see and test, get the resolve tested of the buyers and see what happens. But we, as nimble traders using trade ideas, playing the tides and the shifting currents of the day, we can dial it in a little bit and start to look at maybe we have a few good days more left, and then we might have a retest. So don't get too comfortable. I'm in a couple of positions I'd like to say is a big bottom, X being one of them, and let's just take a look at X, okay? Doing exactly what we would hope. Got the nice close above the moving average back here, and decisively doji. So 1, 2, 3, today was the 5th day it closed above the flattening 10-period moving average, which was at one time dominating this thing. So we're getting a shifting of the gears down here, but will it hold? Well, I hope something like this holds. I'd hate to see X go back down and retest lows, but in the back of my mind, I'm trying to prepare everybody for that possibility. The process of finding a bottom, we may roll back over and test these intermediate lows. So don't get married to some of these positions. If you think you picked up some great ones, you may have to have some decisions coming again. Tomorrow we'll talk about the trade of the week, which also is kind of getting ahead of itself. This one's been holding up for the most part because it's kind of a coronavirus play for the wealthy, but riding that beautiful 10-period moving average like a bird in the hand, always rejecting the attempts to break it. And then today we had a nice little gap up. We got to close above the 50 period. I'd like to see some follow through tomorrow, but we'll talk about that in tomorrow's webinar. Other than that, I think the tone is we're trying to build on something, but I think we're going to build on something short term because I fully feel like this market's not going to make it that easy to just look back and say the event of last week was the bottom. It's probably going to be retested, and that's kind of my big takeaway from today. Andy's Apple, yeah, Andy's Apple call was solid last week. We didn't really have a trade of the week, it was cash, but for those who wanted to play, there was a beautiful, just follow that red line right over here, congestion, resistance, 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 support, big pivot line at 215, and Andy kind of noticed that. And so if you're not afraid of kind of grabbing small size in the heat of the storm and then adding to it throughout the days, you see the day starts to close better, that worked out pretty well. And as far as Apple being a bellwether, Apple's, it's hugging that 200-day moving average there, and this 20 period is probably going to have something to say about it. But just before I give it back to Jamie, I think the Qs are the ones leading the way. They were the first ones to post that close above. The Dow is close, just like the S&P and the IWM. Same old story, just bringing up the rear, always an underperformer, the black sheep of the family. Russell 2000, people are not interested in small caps. They just want to put their money back into Apple and Amazon and Tesla. All right, Jamie, that's all I really got for you today.
Yeah, good stuff, Steve. And it's funny now looking back, before the downturn occurred, we were still popping all-time highs, and we were always talking about the IWM, and well, still never got up to its highs. Does that mean something? And I guess technically it did.
We said it was either going to be dragged higher or it was going to lead us lower.
Yep, and there you have it. All righty, let me grab it back from you. Okay, you should have eyes back on my screen here. Yeah, and so, and one more thing to point out about the excellent analysis from Steve is that everything was low volume today. I mean, SPY had a little volume spurt on the open, and then we quickly fell below normal on all those smaller time frames and finished the day at 0.79, which I can't even remember the last time we closed with under 1 relative volume. So in addition to what Steve has pointed out, and the volume starting to wane, that's a little bit of comfort there. Or we could say that this float up to the top of the range here was on low volume. So there's a couple different ways. You could perceive that is good or bad. From a technical perspective, it's good. From a volume perspective, is it good? I don't know. We'll find out tomorrow, I suppose. So just a low volume grind up for the rest of the day. Expectations didn't really give me a whole lot to go off of today with my favorite compare count windows, which I typically look at 15 minutes into the open. These were the readings that we had today. Anything below, or excuse me, anything under a 55% bias to one side or the other is typically more or less a non-event. And we can see here a little bit of selling in the opening 15 minutes, but then that quickly went away and we grinded up higher on low volume. So for all practical reasons, especially on the low volume today, the compare counts were kind of a non-event. And I will carry that one step further because most of the time the windows that I like to showcase and show you guys the range breaks and nice quality, low risk, high yielding setups are typically ones that are doing exceptional volume. So as you might imagine, if the volume was low across the board today, my windows that I typically favor to the up and the downside, turbo breaks up and down, they just weren't producing today. Not to say that there weren't setups from a technical perspective, but the volume was not accompanying them. It was more or less kind of like opposite day. Things that were hitting lows with high volume quickly bounced up and grinded higher. Things that were hitting highs with low volume retraced and kind of went sideways. So kind of an odd day as far as my bread and butter windows go, but I digress. Let's go ahead and talk about Holly, because very pleased with Holly's performance today. Where'd we go there? Okay, so Holly kicked out 20 signals, all right, and was up approximately, assuming, if we take a peek at the channel bar over here, of course these numbers are assuming a 100 share trade. So if we tally all the numbers here, we get up approximately 3.5 points on those 20 signals. Of course, when we're looking at the trades, I've got my Holly set at $100 risks per trade, as we can see from the AI trade size. I'm just saying let's risk $100 on each trade. So that's where you get these numbers right here. On a moderate profit basis, risking $100 a trade on those 20 signals, we've been up about 800 and change, a little bit more than 800. Of course, that does not account for commissions and slippage. If we peel it on over here to conservative mode, $437, moderate winning the day at 828, and aggressive coming in decent, but not quite as high as moderate. Once again, this is all your personal preference. I tend to like moderate, but that's just my personal preference, kind of splitting the difference between conservative and aggressive. And since we do have new people in the house today, as we always do, just want to take a small moment here as we discuss these Holly trades. You'll notice up here on the all trades blotter, we're going to be looking at conservative profit mode and moderate profit mode. And the difference between conservative and moderate is that conservative mode is Holly just doing what you or I would do, obeying our rule set, all right? And the three primary conditions that will cause the AI to exit the trade: stop loss is hit, profit target is hit, or a timed hold, okay? Because all of these signals, if we check out the strategy panel down below here, we can see via the time stop what the time stop is for each and every strategy. Sometimes they're 15 minutes until the close, like tailwind, 10 minutes to the close, breakdown and break up short, or a breakout short, or breakout long and breakdown short. And other times they're 30 minutes, like power hour short, which kicked out one play today and made a little bit. But each and every one has a different intraday hold time. And we've always got people asking us, yeah, are you ever gonna, make one of the modules a swing trading module? And that is in the works. It's just not quite there yet, but hopefully before too long, there's talk of 2.0 being converted into a swing trade module. I see your question there, John. And when you're in moderate mode, a lot of the times we're ignoring the exit signal. So yes, if you're ignoring the exit signals that the AI kicks out, you would need to, well, you can exit those manually. Or, depending on what you have running, if you're automating Holly, It's possible to do both. I prefer to exit them manually. All right, so getting on to the topic here, talking about the difference that we see in conservative profit mode and moderate profit mode. And you'll notice that some of these, and I've got these sorted by moderate profit mode. One more time here. If there is a spread between, well, then we talk about how we could have extracted some of that spread there. Good question, Marcus. He's asking, what do you think the profit would have been when commissions and slippage are factored in? Well, the good news is it's easy to count up if you're trading at Interactive Brokers and you're paying just a little over $1 per side, call it $3 for the round turn. $3 on 20 signals gives you an approximate commission cost of what, $60 or so? All right. Slippage is a little bit different. We just have to take that as it comes. If you do have access to the premium subscription and you have access to Brokerage Plus with all the automation functions, okay, it's always recommended to run Holly in simulation mode. If you do that, and by the way, I usually do that, for some reason forgot to kick it off this morning, or I reconnected and forgot to turn it on. But what you'll notice if you have those permissions and you run Holly in auto mode, in paper mode, you're going to notice that you're getting slippage. Okay, your price is always going to be a little bit worse than what you see here on the all trades blotter. So that's a very good way to assume slippage. But if I had to just pull something out of the hat here, based on what I've seen over dozens and dozens of sessions live and in paper mode, I'd say average slippage, depending on the day, unless it's some crazy one that pops up with a thinly traded one with a large spread, I'd say average that I've seen could range anywhere between 3 and 7 cents per trade. Okay. And there is a possibility sometimes that you get positive slippage. All right. If a stock was triggered at a certain level and then took a little peel back in a matter of seconds, it is possible to get positive slippage, but it is an exception, not the norm. I just like to typically do it on average, and I'd rather highball it than lowball it. So let's just call it 5 to 10 cents of slippage on average. Okay. All right, let's take a look at how we could have extracted some of the spread between conservative and moderate profit mode here. So first on the list, when we sort by moderate profit mode, had a really nice trade in this SNY today. We can see these are 15-minute candles intraday. We can see this one came relatively early, about as early as Holly likes to start, which is about 6 minutes into the open here. Calls the buy signal here at 43.90. And then boom, that following 15-minute candle, off to the races, all the way up to 45 and change, looks like 45.36 or so. And then boom, right back down again, but still in the money. But that was just a nice little wide range bar, ended up being a wick. And then we get some sideways motion here. So notice the reason, as I was explaining earlier, in conservative mode, we got stop loss profit target and timed hold. But then we also have 2 audibles that Holly can call to exit a trade early in the form of profit save and reduce risk. And I guess that little wick up kind of, got Holly in the mode to peel out of the trade, because you can see in the next 15-minute candle there, she's only in the trade here about 25, 34 minutes or so. And she pulls the plug right here, all right? Exits right at the 44.20 level on $100 risk, ends up banking 65.75 on profit save. We see the panel flash, we think to ourselves, wow, sometimes, but not all the times, these wicks act as a telegraph, because the buyers took control, sellers brought it back down, but slowly throughout the day, we grind and grind and grind, don't quite get all the way back up to that point. But pretty close, all right? So the bottom line is that's a big difference between 65.75 and $215 there, a little over probably a 3x or so that we could have extracted, or anything in between there. So 3x based on what Holly booked in conservative profit mode. And really all we had to do is go, you know what? I like it. We're not even anywhere near back down to the entry signal. We're staying well above it. So we either stick with our hard stop or, you know, you can always do a little bit of the 50-50 methodology, which basically that is to feed the demons that sit on your shoulder every day. I don't care how long you've been in the chair, all right? You see it come all the way up here, and then it comes back down here, and you're thinking to yourself, well, this thing might go back down and break even. What should I do? Well, you either make a decision. I'm going to stay in it. I'm going to stick with my hard stop. But sometimes we have to feed those guys, okay? The greed and the fear demon. All right, we're going to take half off the plate with Holly. We make a little bit of money. We're not scared that it's going to go back to flat. And if it does, we still made money on the first lot. So whether you keep the whole lot or do the 50-50 methodology, that helps us maintain the mental perspective. And then a break-even stop would have kept you in this one all day as we ebbed and flowed, well above the entry price. But all we had to do was ignore the exit signal and stay in it. Now, while we're on the topic here, this exit signal, if you weren't in the trade already, wouldn't have been that bad of an entry signal, okay? So a lot of the times when I see Holly exiting on a profit save or a reduced risk, I'll use that as an entry signal, all right? So a lot of spread in there on conservative and moderate mode on the SNY. All we had to do is sit in it, use a break-even stop, or keep our hard stop, and we could have gleaned the majority of that spread there. Now, while we're on the topic of using an exit signal as an entry signal, I'm just going to scroll on down here because this was one where that was the case. All right, PSTV. All right, this one came in about 19 minutes after the open, and look what it did for a nice long while here. All right, I saw it flash, I pulled it up, I'm like, interesting. I think I saw it in this probably third 45 minutes, an hour into the open, and I'm thinking to myself, okay, I've seen this before. All right, I've seen this sideways action, plenty of time to get in there. And the cool thing about this PSTV entry was you had plenty of time to get a price that was much better than the AI. You know, anywhere down in this level right here, you've got a nice anywhere between $2 to $2.10. You could have acquired the stock here, which was 26 cents better than the AI, and it's a $2 stock, so that's a pretty big percentage. And after seeing it do this little dance for 1, 2, 3, 4, 5, 6, 7, 8, almost 2 hours, you're thinking to yourself, yeah, it came down here and tested these levels. It never really got close to the stop. I might want to take a stab at this one. So had you done that, which I did take a little piece of this one today, around the, I think I was 209 or so, you know, you had the opportunity to exit that thing up around 260 at the very top, 270, which on a percentage basis, clipping 60 cents out of a $2 and some odd stock, there was a potential for some very nice returns in a very short amount of time. Now, of course, this one was going crazy on the volume today. Look how it finished. 61 on the relative side, and almost, not quite 18 million, 17 million. The interesting thing about this one and what got my attention so early on the exit signal, or actually this one wasn't. I just noticed that it was down and hovering well above the stop. Didn't exit that one for quite some time, but once again, it was a signal that Holly brought to my attention. I didn't just jump on it. I just waited and waited to see what it would do. And what got my attention about this one too, and I encourage everybody to look at these factors in real time as these signals come out on a day-to-day basis, was the float here. 3 million shares on the float. It had already done several million shares, but the float flipped over over 6 times today. You got a 3 million share float, or not quite 6 times, I should say. 18 million would be right about 6. So a good 5 times flip over of the tradable float today. So some really nice opportunity in PSTV, even though it's not on the quote unquote highlight reel here. I see your question there, Wave. The question is, to do the 100 shares mentioned, what would have been the account size needed? Well, if you're talking about that PSTV, that's only, you know, that was only a $200 trade. I mean, excuse me, 100 times 2, yeah, it's a $200 trade. Now, of course, you know, that doesn't have anything to do with having a day trading account, because you're going to be limited if you don't have more than 25K in your account for pattern day trading rule. But on 100 shares of a $2 stock, you're only looking at 200 something bucks in capital, obviously. All right, and let me just check this question by John out because it might tie into what I'm about to talk about next. Profit is what you've done if you have. Well, John, what I'm talking about here in moderate profit mode, all right, let me clarify what that means. Moderate profit mode is going to continue to track the P&L of the position even after Holly has closed it out in conservative mode. The only time it will not continue to track the position is if a stop out occurs, because once a stop out occurs, stop's been hit, that's going to lock that loss in. So if it moves higher, the only column that would reflect that if a stop out occurs is the aggressive profit mode, okay? Which basically aggressive profit mode is just putting the position on and not using any risk parameters. It's just going to continue to track the position regardless of whether or not it gets stopped out. Not really sure what you mean about eToro there, George. Would you consider eToro to be an addition to trade ideas? Don't really know what that means. Okay, let's take a look at one more here, which is a beautiful spread between conservative profit mode and moderate profit mode here. Big difference between $0 and clipping out almost 200 bucks there. Why did the AI exit? Profit save, okay. Look how short of a time the AI was in the trade. We get in here at 59.24, only in the trade for, it looks like, entry time of 8:35, not even 30 minutes there, okay. NVO getting a little sideways action here, but Holly closes it out right here for a flat, all right, just shortly after the trade was made. Not getting anywhere close to the stop area, a couple of little wicks down here, but pretty much ebbing and flowing right around that entry signal, and we just had to give it time to work, okay? Also based on market conditions, you know, we had a nice little, you know, green market developing, so all we had to do was stick to our hard stop on this one and enjoy the ride up. Did take a little pullback back down to the break-even area, but all in all, not a bad chart. Just sitting in something for the remainder of the day, adhering to our hard stop level, okay? So once again, this column continues to tally the gain unless a stop is hit. If this stop would have been hit, then this would have frozen as a stop out. You wouldn't see any change in moderate profit. That's why you're seeing moderate profit and conservative profit pretty much equal on the majority of these trades today, because none of them stopped out. No, Steve, the AI doesn't only work on 15-minute charts. This is the time frame that I choose to use. But regardless of what time frame, these signals will pop up on any time frame. Your time frame is simply your personal preference of, you know, how you like to view the intraday stuff. So these are all based on statistically weighted strategies that we see down here. All right. So your time preference on the intraday is simply that, whether you like to watch 1 minute, 5 minute, 30 minute, 60 minutes. I just prefer 15-minute candles here. Correct, John. You know, regardless of when you exit, just like Holly flatted the trade here, all right, reminds me of what I do sometimes. We get impatient, even though this one, there really wasn't a whole lot of time to get impatient. I'm not really sure, you know, if we stretch this out and saw a few more candles, maybe we could see Holly getting a little bored with the kind of flatline activity, but even on the 5-minute time frame, not a whole lot of time was spent in that trade. I guess, you know, since the profit save and reduce risk are kind of just modified versions of a trailing stop, that's why the trade was closed prematurely. But I always like to say, the exits are not the AI's strong suit, okay? The superpower of the AI is statistical probability. And typically, we can use our chart reading skills to, a lot of the times, make better exits. And that is exactly the case in point here. All we had to do is sit in it, Never really got down to a hard stop, and that's a big spread between 0 and almost 200 bucks here. All right, you can see here in CSV, which by the way, we're gonna talk about this CSV trade here because this happens from time to time. We had duplicate entries, or we had calls on the same stock. A lot of the times when we see duplicate signals, they'll be from different strategies and they'll trigger at the exact same time. Now, CSV, different, okay, from different modules and different strategies, but you can see here, these were not at the exact same time. We had a 3-minute separation between the first signal, which was signaled by float on, and then quarterback picked it up in the following candle here as it kind of pulled this little upside down doji here on the 15-minute when it pulled back from this level up here. All right. Now, interestingly enough, CSV. First, let's talk about what this company does. All right. And ironically, in our little hedge fund that myself and Steve and Andy and Michael Nassau participate in, this was one of our positions not too long ago, but it was when the market was bottoming out along with a couple of other positions. And sometimes you get to hold them and sometimes you get stopped out. Unfortunately, this is one that clipped us out on a downtick barely, along with a few other positions that immediately almost doubled in value, but that's just the nature of the beast. Fortunately, we had some of those that stuck, okay? But CSV was one that we were in that we got stopped out of, and then here it comes with a dual signal from Holly, and we were all kind of chuckling about that today. But CSV, what are they involved in? Ooh, a grim little topic, but applicable to the situation at hand today, or situation at hand in the overall macro world with the virus thing that we have going around here. Carriage services, funeral homes, and funeral services. And no big surprise there. Like I said, it's a grim topic, but you know, it is what it is. So this first signal here, Holly timed it pretty much, not perfectly. Okay, you can see the shaded area up here. We topped out up here at 1789, and I believe Holly's exit signal on that first one was 1730. So didn't quite top ticket, left about 60 cents on the table on that first conservative exit, but a pretty good exit nonetheless. Risking 100 bucks, got a nice little 2R there in conservative mode. And you can see, since she made such a sweet exit on that one, had she held it to the close, would have given up 50 bucks, all right? Whereas the second entry, the spread between conservative and moderate, we've got not quite a doubling there, but almost. Double would be just a little bit shy of 140. So a good, you know, a good value there on the second entry here, which was on the pullback. So first entry right here as this range is being broken. Not even that it was a range break trade, it was from float on, which typically is going to be showing us stocks that have a float of less than 20 million. And we can see down here, CSV float 16.62 million, finished with a nice hearty relative volume of almost 4. Okay, now this little pattern right here on top of the signal from the AI, you know, we can just term this an auxiliary pattern. That range break was being penetrated. We got statistical probability from float on. It's a low float stock, so when volume comes into these guys, they typically move a lot more than, say, a stock with 100 million shares in the float. It takes less volume to push these things higher, and consequently on the downside, when they go down a lot faster because not as many shares to go around. But in this case, it was to the upside. And then just like a trader, a human trader might do, we buy it here, and a lot of the times we'll buy the pullbacks if we want to bolster our position. So that's exactly what happened with quarterback, which by the way, is a strategy that's been in the hopper for a very long time. It keeps performing. And Mr. Gomez was the author of the quarterback strategy. So we get the second signal here, kind of toe the line for about 15 minutes before we take this next leg up, and even one more little period of consolidation here before we get the majority of the move here. So even maybe a third opportunity to leverage this position as we get the sideways action when buyers and sellers become equal before we get the biggest green bar and the biggest up move of the day there. So a lot of good things were going on with this CSV trade. Dual signals, auxiliary pattern playing out after the first one, and then another period right here where you really could have leveraged that position. Now keep in mind what was going on with the 10 period through this whole time, just levitating well above it. It was in control. What happens when you come back down here and close? Well, that was kind of the end of the fun. You know, as soon as we got the close over here below the 10 period, kind of went to sleep for the rest of the day. But this one might be one to keep an eye on tomorrow, just because it was so frisky today and had some nice upward momentum to it. All right, looks like Steve's knocking out the questions. Does Holly auto apply buy and sell signals, or is this a manual setup? Yeah, everything you see here is being done by the AI, okay? But keep in mind, you know, when you interact with the AI, you know, you always have the option, assuming you have the premium package with Brokerage Plus, permission for automation, you know, there's the terms that we throw around called gray box and black box. So for example, a lot of people prefer the gray box methodology where you let the AI make the entries, and then you manage the exits. That's what we would call gray box. If you're letting the AI get in and get you out, that's more black box theory. Now, you know, we always like to say as well, you know, it has the capability of doing that, but most people prefer the gray box. So, you know, what we try to steer people away from is thinking that they're going to turn on the AI, go out, hit the gym, go have some lunch, and come back and count the money. Okay. Sometimes that methodology works, sometimes it does not. It's kind of like opportunity that presents itself in each and every trading session. You know, when we're in a quote unquote regular market, well, you might have 4 or 5 big days a month where you can really press it. Of course, we have not been in a regular market, all right? So, you know, 6 of one, half a dozen of the other. All in all, gray box, I think, is probably the more popular methodology that people choose to engage with the AI. And yes, once again, Upender, the entries that you're seeing here are all coming from the strategies down here. So the only time a signal is going to pop up here is if all the characteristics of the strategy have been met, and then you're going to see the trade pop in a real-time basis. As well, you're going to see the AI closing out the trades as well. So everything that you see here is automated, okay? But when it comes to executing in a live market, you've got the option of however you want to treat it. Let the AI make the entry signals. If you're going to automate, you make the exit signals, so forth and so on. All right, so a dual signal in the CSV, which presented some nice opportunity as well. Let's take a look at this VPL because, you know, kind of a big difference between -$10 and $108. And we can see over here, this is one of the reduce risk signals. So here we have Holly executing the 55.61 long signal, and it rides all the way up to 56 and change before coming all the way back down. And this is where Holly plugs out. Right, that upside down doji there looks like about right there, 55.55. Yep, 55.60-ish was the exit price. Takes a small loser. Nothing to write home about. Almost close to a flat on a $100 risk. You lose 10 bucks, no big deal, but reclaims that entry signal line. So whether you were in this trade initially and sat the wiggle and ended up holding it until the close, not bad. You still made 100 bucks. Or this is another candidate where ideally, when you see Holly closing this out, you see it has not really been below that entry signal line, and we get the upside down doji and we get a reclamation of the entry line here. This is also another one that could have been a really good exit signal entry. All right, reduce risk, size up the chart, could have made the entry as Holly was making the exit signal, probably got the same price or maybe even had the chance to get a little bit better price here. So once again, it's always important to pay attention to everything that's going on in the AI because the statistical probability of these plays is good for the entire day, all right? So just think about this. We can also view the AI as a high quality ticker, okay? But the big difference here is that everything coming through based on the back test and the optimization the night before, we've got statistical probability on our side, okay? So think about that as you move forward, all right? There's lots of different ways to use the AI, manually making signals, automatically having it get you in, or just using it as a high quality information source, okay? Or all three together. All right, anything else jump out here? We got a little bit of a spread there. We got a little bit of a spread there. Now, NVO. I think we've talked about this one already. 0 and $200, $10, $100, and now you see the spread kind of dry up here. Now, of course, FTSL still worked. 0 versus $40. Not the prettiest chart in the land here. All right. You would have had to sit quite the wiggle almost down to a stop out level. However, I will say this, once Holly brings a stock to your attention, and since we only had 20 signals here today, or let's see, yeah, 20 signals, all right, it's also a good idea to put these into a custom list or go through and like all the signals that Holly has produced, all right? That way you're constantly monitoring them, because this one would not have been bad at all to see it come down here and almost tap the stop level. And then we got a little higher opening here and the slow drift up here. So, you know, I'm trying to make it a big habit to see the ones that Holly's upside down in, seeing how close they come to the stop levels, because getting a better price than Holly, or even getting a price down there close to the stop level, all you got to do is make it back up to the entry line to have some nice green. And then if you get anything above the entry line, even better. All right. So Stephen, I see your question there. The question is, does the premium plan include automated trading? Yes, it does, but the one stipulation is if you want to automate your own strategies as well as automate the AI strategies, you're still going to be subject to the one-time fee of $1,100, one-time licensing fee on top of your premium subscription if you want to auto trade the AI and also auto trade your own strategies as well. All right, so I've been gabbing a lot here about Holly, and that's fine because she was really the prime thing that performed today. My windows that are typically accompanying, you know, I like to see high volume in all my windows. So the volume was just not there today in keeping in with the regular market, you know. Nothing was setting up with high volume. The setups were there, but the volume wasn't there. Therefore, my bread and butter windows just weren't very productive today. So what I did is I put together a top list for you guys that hopefully might help you find some good long plays. And I've titled it Pin the 10, okay? So I'm gonna drop this one in the chat since we're running out of time here, just so I don't forget. And then I'll give you a little brief explanation of this, and then we're probably gonna be out of time. All right, so that is now in the chat area. Pin the 10. And when I say pin the 10, we're going to be looking at the 10-period moving average on the daily here. Let me get this resorted. Okay, by default, I've got it set up to sort by the change in 20 days here. Not a whole lot of rocket science going on in here. We'll just take a look at the filter set. We're eliminating the ETFs and iShares. Of course, if you want to see those, just remove these earnings min and maxes. And we've got change from the 10-day SMA, okay? So it's got to be between 0 and 1%. Basically, it's got to be right at the 10 period, but not more than 1% above it. Got some min maxes on the stock price and a little bit of average daily volume. Now, as we scroll through these and consult the 10 period, you're going to see some are going to be better than others, but we're seeing closes on these stocks on the daily candles right above the 10 period. Now I've got it set up to the default color scheme is going to be applied to the change in 20 days. But I was perusing this list earlier and I had sorted by the position in the 20-day range. And I started noticing some, nice little consolidation areas down here. SOI, just hovering right at that 10 period there. CLB, 10 period, toe in the line, EAT. I want to say I saw a car on here earlier, Steve. But maybe the sort, there we go. Car, one of the things that we've had active in the fund as of late. Noticing these little 2 and 3 and 4 day downturns and then butting right up to the 10 period here. So, of course, assuming that we don't go back down and test these lows, these might produce some decent swing trades for you guys, looking for stocks that have reclaimed or hovering right around that 10 period average on the daily. So, some are going to be prettier and tighter than others. If we go back to one of these tighter ones, we know that, well, if we take a shot here, even though this range down to the bottom here doesn't look very big, and this is going to be the case with just about everything, ladies and gentlemen, since these ranges have been so big, doesn't look that big, but it's about a 3-point range here, between these levels here, 943 down to 664 on CLB, pretty much, 658 here and 13 here. Or if we flip on the market and we see penetrations of the 10 period, we could easily use those for some downside short plays, okay? But everything on this list is going to be right at that 10 period moving average. So whether we go up in the next 2-3 sessions or whether we go down, we've clearly got our profit potential defined here if we get heavy movement through this 10 period right here. So just keep that in mind. We toe the line and go up, or we get heavy and break these levels right here, then we know what our profit potential is or how much room we might have in the daily here. So a pretty simple top list, but many times simple is better. And you can find some really good setups here, hopefully, by sorting by how much we're down in the 20-day period or change in the 20-day period. All depending on what unfolds tomorrow in the next couple of days here. All right, I think we got like 2 minutes left here. Let's see, Steve looks like he's knocking out the questions here. Steve, anything I need to elaborate on before I hand it back to Scott?
Yes. Wave S is having a difficult time understanding why 100 shares would be across the board. And I'm saying we don't have to quote in 100 shares. You can assign the AI to only trade $500 or only trade 1,000. So the numbers are there. Jamie was explaining earlier, it was all expressed in 100 shares and the particular metrics that he was showing. So the most expensive stock on there looks like 59 bucks, 100 shares. That's a $5,900 equity draw to make that trade.
Absolutely, and I know it can be a little confusing because we can set our risk parameters here, and if I'm risking $100 per trade based on the stop, it's going to put me in the proper amount of shares, as you can see in the share column. Now that can be a little confusing because over here in the channel bar, it's assuming 100 shares per trade. So hopefully in one of our next versions, right, we're going to be able to have unity here. Whatever we set here, hopefully will reflect here. But yeah, it can be confusing because this is using 100 shares per trade, where we have completely different metrics over here where I'm risking $100 per trade, and then it's sizing me accordingly. All right. So Wave, hopefully that makes sense and helps crystallize that topic. But yeah, it can be a little confusing due to the differences in the way that it's being calculated here versus the way that we can tell it to calculate here. All right, no problem. Takes a little bit of getting used to, especially if you're seeing everything for the first time, Wave, but repetition is a good thing, and before you know it, won't be that confusing. All righty, Mr. Scott, if you're ready to walk us out here, we're ready for you.
All right, that sounds good. Yeah, before we leave, a couple things to remember. We do have a new ebook that's out. It's written by our CIO, Dave Mabe, who created the Odds Maker, and Holly. It is a free ebook. It's all about earnings season and how to take advantage of it. It also includes some strategies that you can import into your layout. Just go to trade-ideas.com/earnings and get his tips on how to take advantage of earnings season. As a podcast, we release usually weekly. We haven't released one in a couple weeks, but we have some great ones that we released at the beginning of the year that have some good interviews, so do check those out. Should have a new one out pretty soon. Just go to any podcast application and search for Trade Ideas Podcast. It should come right up, and then you can click on the subscribe button and add us. We've got a code that's good to the end of the month, or at least until this time next week, and it is March On. It's all caps, saves 15% off the first month or year of any of your Trade Ideas subscriptions or Brokerage Plus. Take advantage of it. And it can also be used to do an upgrade from standard to premium. You can follow Jamie on Twitter at QuantBot. You can find Steve at Today Trader. We've also got at Trade Ideas, all that kind of good stuff. Follow us on Facebook at Trade Ideas Pro, and like everything that we post, share it with your friends. info@trade-ideas.com is the correct email address to send all your questions to. It goes into our help desk software, so it gets routed to the appropriate team member to help you out. The recording of this will be up later on tonight or tomorrow, so if you missed anything, stay tuned tomorrow for that link in your email that you get from GoToWebinar. It'll take you directly to the playlist. Thanks, everyone. Thanks, Jamie. Thanks, Steve. Have a good one.
Thanks, everybody. See you tomorrow. Bye-bye.